Morning, everybody. Welcome. PPP round 2. We're going to talk forms today with two really smart guys, Greg Butler, Wipfli, Nick Place, Bridgewater Bank, both who have done a lot of PPP stuff and have helped yours truly through the process. So this is going to be an exciting, good event. I'm going to just babble here for a minute while people join the group. Looks like our attendee list is climbing. The purpose of today's event is to help you get through how do I do this form. And we just talked about, hey, the form's pretty simple. You put your name and address on there. It's simple until it gets complicated. So let's go through, we'll hit the complicated parts and try to answer your questions. If you have questions that we're not answering live, put your question in the chat box. There's a box at the bottom of the screen. Probably you're looking at Nick's face right now above it, and you hit that chat button. That'll bring up a window and you can type in there. Feel free to type in there and say hello too, so we know you're there. But here's the trick on the chat box. There's a 2, it says 2 at the bottom. And right now it says to all panelists. If you drop that down, it'll say to all panelists and attendees. Then everybody can see your question. Then everybody can see your answer. We also have the ever bright Jim Lockhart, super genius tax person, monitoring the chat room right now, so he can even type in answers or make sure that yours truly is seeing the questions and ask those questions of Nick and Greg and me. All right, we're rocking and rolling. Attendees are in the room. We're going to put this on YouTube, by the way, afterwards. So if you want to go back and kind of rewatch it, you didn't catch something, you'll feel free to go to our YouTube channel, REJournals or Power 30, and you'll find it there. Okay. All right, gentlemen, why don't you do a quick intro? Tell everybody who you are for those that don't know you, and then we'll jump in and get this form and these questions going.
All right. Good morning.
Go ahead, Greg.
My name is Greg Butler. I'm a partner with Wipfli, and I lead our national tax practice and our PPP loan practice.
And Nick?
Yeah, good morning. My name is Nick Place. I'm our Chief Lending Officer here at Bridgewater Bank. We're roughly $3 billion in asset community bank located in the Minneapolis-St. Paul market, primarily commercial focused in terms of our client base, and have participated in both the first round and this round of PPP loans. So did roughly 1,200 and 180 million of PPP loans in the first go around, and are actively chewing away at this next round too.
And we love Bridgewater Bank because they do a lot of commercial real estate loans. So we talk the same language most of the time, right? And then Greg Butler's firm, Wipfli, has a dedicated team for commercial real estate. So it's a good fit for us. We stay in the lane. We address commercial real estate issues, even though this PPP thing applies to all kinds of different companies. We're trying to keep it in the fairway and nail it with people that understand both commercial real estate and PPP and the loans. Okay, I'm Todd Phillips. I'm your host. I have a show called Power 30. I also host most of our webinars. If you haven't seen my face, you haven't been paying attention, I apologize if you don't want to see my face anymore. I'm probably here until this pandemic's over, hopefully like 2 or 3 months. I don't know. All right, well, let's start with, I'm going to bring up the form. And I think that's an easy sort of place to look at. This is my weekly comedy routine. Watch me try to pull something up on the screen. All right, so I'm looking, I see, let's just start at the top. Gentlemen, can you see it on your screen?
We can, Todd.
Okay, I'm looking at the check 1 box at the top. So from what I understand, this PPP round 2 is open to companies that PPP round 1 wasn't open to, because I see 501c6 on here and 501c3s. Is this a broader than it was before?
Yeah, the Consolidated Appropriations Act added in some new eligible borrowers, the C6 Chamber of Commerce's and some other ones that were shut out of the first round. Now they've been, added back in as eligible borrowers. So again, there's, they good for them. They, so now if again, as you look, the box, if you compare box 1 on second draw to box 1 on the first draw, it has more categories.
That's wonderful. Good job, Congress. I see an issue on this form, and that is the first box, sole proprietor. How many, Greg or Nick, of your questions, like how do I do this, relate to sole proprietors versus a corporate entity with multiple employees?
Yeah, I mean, Todd, I'll comment, and then Nick, you can jump in. We had, PPP second draw is built off of the first draw rules with some changes that, of course, we'll talk about But it's funny, you know, we keep getting more guidance, and we finally have some pretty good guidance around sole proprietors and how they calculate their loan application. To be honest, what we have now, we said, gee, where was this information back in March of last year when we were trying to answer these questions? But, you know, I think we have pretty good guidance now on how to calculate that. Nick, comments?
Yeah, I would agree. You know, I think, you know, what we're seeing in the second round for sole proprietors, we're having, you know, a number of them that are getting, you know, even though they're using the same payroll information, we're calculating different loan amounts for their second draw because, as Greg mentioned, we got additional guidance, you know, in April after we had already worked through some of these sole proprietor applications, and then we found out later on that we're supposed to exclude this or exclude that. So those nuances are certainly coming in, and people have questions as to why their loan is different from their first one. A few things I'd mentioned, you know, you've got the second draw application up, Todd. For those new organizations that are applying that did not get a PPP loan on the first go around, there is a first draw application, which looks very similar. You know, so whatever financial institution you're working with, just make sure that you're getting the correct form that you're filling out. You don't want to have to do the work twice. But to your question, Todd, on sole proprietors, and that is where we have gotten a lot of questions on it, and I think we've had to work through a number of issues just early on. Like, for example, you know, somebody might be a sole proprietor, they don't fill out that year of establishment box on the top right. Well, we have to know that that's a field we have to enter in. So, you know, people should just make sure that they're filling that in. And then a common question or common error that we're seeing too is sole proprietors. There's a question, I forget where it asks for a number of employees, over there on the right. It'll ask for your number of employees. A lot of sole proprietors are putting in 0. Well, you have to put, if you're a sole proprietor, you have at least one employee, and that's you. So if you put in 0 and your loan amount was, you know, $20,800, the max that you could get, they're going to say, well, you didn't have any employees, so your loan amount should be 0. So it gets kicked back. So you need to have at least one. So if you're a sole proprietor and you have an employee, so then you'd be putting 2 instead of 1.
That's fantastic information. I would have done that wrong as well because you're the owner, right? Aren't you?
Right.
This is the one I wanted to kind of start with that I thought, boy, how interesting is this? The times in my life when I've had to fill out what the Naics code is, and every time I've had to look it up to even figure out what that means, where to find it. It's been just informational purposes, like for a census, you know, how many companies are in this line of business. Didn't ever really think much of it. And a lot of businesses are hybrid. They do a lot of things. So a lot of difficulty around this because it matters, right? Why does it matter this time around, guys?
Yeah, you know, and it even on draw one, it mattered a little bit on determining your number of employees. But this time around, Todd, it matters a lot more because companies that have a Naics code that start with a 72, their borrowing base is 3.5 times your monthly average instead of 2.5 times. So it can make a big difference. Now, you know, the interesting thing is the first, you know, we're getting a lot of questions now from companies, especially around, I'll call it a brew pub or something, they're a brewery, but they also have maybe some food service. They're trying to figure out, you know, if they can change their Naics code to 72, and as you have it up for accommodation and food services. And it's a you know, tough one to go through because, as you said, you know, most of the time people never really concentrate on this. And what the SBA and their guidance is saying is that you have to use a Naics code that is consistent with what you reported on your last income tax return. And a lot of companies, you know, maybe never really paid attention to that. And the normal guidance would be that, you know, to your point, companies may have different, you know, types of trades or businesses. And normally to come up with your overall Naics code, you look at your primary business, and that could be based on employees, revenue size, or whatever. So, you know, we're getting a lot more questions for that reason around, hey, can I change my Naics code? Can I do something different with it? And it's, you know, it's a tougher conversation, especially now that, you know, the SBA is saying, you know, we expect you to use the same Naics code that you reported on your prior tax return. I don't know how they're gonna circle that back, because in most cases, you don't have to supply your tax return with your loan application. So Nick, I'll let you
Hey,
comment. Oh,
I got a question here. So we have a new business in the first quarter of 2020. How do you, and it's a restaurant, how do they document the 25% revenue drop?
we're gonna get to that later, Jim.
Okay.
Let's go through an order on, because
Yep.
we'll get to the gross receipts reduction eligibility. We'll get to that.
Great, thank you.
Yeah, I think that's coming right up on the form. So Nick, wrap up on this code. How do I get to 72?
Yeah, I agree with Greg. I mean, historically, it's never been something that people put a lot of time or attention to, and there was never any penalty for getting it wrong. It was just a data collection thing. We internally would do the same thing as we try to sort of break out and know what sort of segments and business types that we do business with and how is our client base cut up. But again, that's just informational purposes for us. So we try to get it right, but there was never sort of, real hard dollars on the line in terms of determining if you did get it right or not. And there certainly is a lot of, gray area with folks that have a business that has many facets to it and varying sort of business lines. So, I think we've seen people remaining consistent with what their NAICS code was on their prior application. Especially for these second draw loans, nobody's really changing those. We haven't had a lot of folks requesting that specifically.
So, well, hopefully you get the right code and it starts with a 72, because right here, right, it's going to change your loan amount substantially. 2.5 times to 3.5 times. All right. All right. So, okay, I think we're going to get on to average monthly payroll. This is pretty straightforward until you start to realize that, just like round one, all of the things that do and don't go into payroll, and how are you calculating average? So Nick, I think your bank has a worksheet that people can fill out. You want to talk about that?
Yeah, and I'll caveat it with every financial institution is going to have their own sort of methodology of working through it. Ours, we've created a handful of different calculators that are built into Excel that will help our clients, pencil through what their loan or what their average monthly payroll is. On these second draw loans, if folks are using their 2019 payroll that they had previously provided, we're not even asking them to either submit that information because we already have it, or determine what their average monthly payroll is because we already have that information from their prior application. So we have tried to simplify that a bit to give people some instructions on a line by line basis as to where they should be finding the information, because certainly the applications don't do a great job of giving you a whole lot of detail as to where to go to find that stuff. And it's very different for the business types, right? I mean, the sole proprietor is different than an S corp, for example.
What kinds of things are included in payroll? If I remember right, it's 401k contributions, health insurance contributions by the employer, not employee, and then taxes paid by the employer. Is it FICA and Medicare, or is it something else? I can't recall.
Yeah, Todd, it's just state unemployment.
State unemployment. Okay. So you don't get the FICA Medicare, but
yeah, because I mean, you don't get the employer share of FICA and FUTA. And if you use gross wages, the employee share is already in there. Now, again, it depends on how you do the calculation. If you start, they in the instructions or in some of the guidance, they tell you to start with your 941 Medicare wages. Then you have to be careful that you add back certain things, because what you want to get to is your gross cash compensation for an employee, kind of on a pre-withholding basis. So it all depends on what you start with. And then, as you said, you add in the other categories like, and that's the other thing, like on the insurance side under round one, we were trying to speculate what could be included in there, and we came up with some guesses, and now, kind of goes back to, now we got much better guidance. And it's like, where was this back in March? And we were thinking, well, why can't you include things like vision and dental and things like that? Well, now they've clarified that, yes, you get to include all of that. So, to Nick's point, the hard thing is, because we're seeing the same thing. If you use your same 2019 payroll information in the same bank, it's a really quick process, very quick. Then you have to decide though that if there are, payroll costs that weren't included in round one, do you want to go through the time and effort to gather that for, 2019, redo your borrowing calculation and resubmit it? Again, you have to really look at what is 2.5 times that monthly average of those benefits mean from a borrowing base. And you do have, on that, coming up with your average monthly payroll, they gave you a lot more flexibility. You can look at 2019 calendar year. You can now look at 2020 calendar year, or you can take the 12 trailing months prior to your loan forgiveness application, as long as you're not self-employed. So you got 3 different bases to follow. We're thinking, again, just thinking about your employee headcount and payroll, most people probably 2019 is higher than the other 2 options, but there are some people that want to look at that. But that's, for our discussions, the hardest thing is, do you want to go through and redo your 2019 calculation? Depends on what you left out and how much of a difference that makes.
Boy, I would. I mean, just to see if there's a difference, because even $100 times 2.5, it's going to add up, right? If you can find anything that's going to be a higher number, right? And you get to choose the higher of the 2.
Yeah, you could use the highest. And I think, in round one, and Nick, maybe you can comment a little bit on value of applications. Round one, people were really concerned about getting their application in before the funds ran out. Just talking to the banks we work with, we haven't seen, nearly the same level of activity. And that's kind of what was expected for round one. But I don't think we're concerned right now about the 280 billion running out as, like we had in round one.
Yeah, I think the amount of sort of anxiety around the funds and the program is a lot more muted this time. We certainly had clients that wanted to be, right there right away to get their application in as soon as possible. But with the just sort of the status of things, and I think there's just more. There's less uncertainty just sort of globally and economically than there was back in March and April. So I think folks are a bit more calm about their application process in this go around. And I think just given the current administration and makeup of Congress, there's a pretty high level of confidence that if funds do run out, that they'd appropriate more dollars to it.
That'll be interesting to see how that plays out. All right. Keeping moving here. This one threw me for a loop when I filled out ours, is the date that you have to decide number of employees. This seems another one that's clear as mud. Do I get punished in round 2 if I am of a lower number of employees on one test date versus another test date? And what are those dates like?
So good question. I mean, one of the differences in round 2 is that for eligibility purposes, they dropped the employee headcount down from 500 to 300. And that's, when they talk about employees, a full-time and a part-time is treated the same for this purposes, this box. Generally, we think of this box should include the number of employees as of the time of the loan application date. That's kind of what the expectation is. We have heard anecdotally that the SBA has some type of algorithm that they're doing in the background, and they're taking your loan application request amount and dividing it by the number of employees in that box. And if the amount is more than $30,000, they're kicking it back because internally they've considered that 30,000 employees should be the most you should get based on your average monthly payroll. The problem with that is if someone used their 2019 payroll and they had a lot more, employees, at the time they did the round one, that could still be a good calculation. I don't, again, we haven't heard it. We've heard that this algorithm is out there. And we're not sure. We had a couple of banks where this came up. They said, well, maybe just change that number to what your employees were on your first round application and we'll resubmit it. But just throwing that out there, just from the standpoint of if you're doing your loan application, you might want to just pressure test that number. And if it's greater than 30,000, you might want to, before you submit it, place a call to Nick or your lender and just say, hey, what should we do with that box? Because you don't want to get your loan application kicked out of the system. I don't know how long it's taken the SBA to, work through these things. So,
Hey, Greg and Nick, we've had a couple of questions about seasonal employers. And is there any guidance with respect to how to count, when to count, with the PPP loan too? Any recommendations as to how you're supposed to count? And
yes, seasonal employers, we've another thing, we finally have a little bit better idea who a seasonal employer is. There's no real change on how to determine your number of employees, but seasonal employers have a whole different borrowing base period that they can look at. They can look back and pick a 12-week period over, looking back, that'll give them the highest payroll. So again, you have to really look at the instructions and the guidance on what you're allowed as a seasonal employer. And then of course you want to probably pick the number that's the biggest. And again, this is another situation where you may redo your calculation because your second draw number may be bigger than your first draw. And then the other thing, I don't want to go too far into the weeds, and Nick, you can comment more, but Nick had mentioned, that there's the first draw application yet that got revised. And I think yesterday it opened up because in certain situations, first draw borrowers maybe got shorted because the guidance was bad in certain areas, and seasonal employers is one of those. So even if you got a round one, if you're a seasonal employer, you can now go back, recalculate your round one. And if you found out you should have got a bigger number, I think as of yesterday, you can start applying for what we call round one increases.
The one thing I'd add to the seasonal employer discussion is, and I think one of the questions asked this, was regarding, when do you receive the funds? Because that does start the clock ticking for how long you have to spend the money. So you have up to 24 weeks to spend the money from the date that it's funded. In round one, we had a stipulation that as a bank, we needed to close each loan within 10 days of the loan being approved by the SBA. So there was sort of a mandate as to how quickly we had to get the funds out and into each borrower's hands. And then that clock started ticking on that funding date. Well, in this round, they don't have a stipulation that we have to close each loan within 10 days. Now, every bank is going to handle internally their processing of the loans. If you are a seasonal business, where I think one of the questions it was asking about a summer camp, right? So most of their wage costs are incurred in the summer, and here we are in January, right? So what I would suggest is either delaying when you apply, and the deadline to apply is March 31st, so that you delay the time as much as you can to get the funds in your hands. Or if you do apply, see if your financial institution is willing to sort of schedule a closing date that is sometime out in the future, so that you can get closer to the time when you need to, or when you're likely to incur your payroll costs. And Greg, I don't know if they've given specific. I don't think they've changed the eligibility period or the spend down period for seasonal businesses. I don't believe, right?
Yeah, I've not seen anything. To your point, it's, you can pick your covered period now between 8 and 24 weeks, but it's still, the maximum is 24 weeks from the date of your disbursement.
All right, that's a sticky wicket, right? I mean, I think where Greg or Nick, where do they get the instructions to navigate that? Is that on the SBA website? Is that the best spot to look?
Yes, yep. You can go Treasury SBA website there. You know, they all the guidance is out there, and you want to look at the there's a number of sections, but there's a section for borrower, and in there they'll have the loan application forms and instructions.
And then
And
you're looking
I'd
for
suggest
seasonal.
referring back to those sites multiple times. I mean, they are constantly adding new guidance, new frequently asked questions. So if you don't get your answer right away and you can't get it from your financial institution, I just encourage you to reach back out to those websites because they do constantly update them.
Yeah, and I'll tip my hand on my political affiliation. I'm a libertarian. I'm just not a big fan of big government. I got to hand it to SBA and everybody else involved in this for how massive of an undertaking this is. They're working at a pretty good clip to get us information. I think a lot of people underappreciate how much work they're putting in over there. All right, this is a section here. I hope you all can see that I'm circling the purpose of the loan. This caught my attention. I think, Greg, you and I were on an event and right when the PPP2 came out, and they have opened up the availability of the employer retention tax credit. And what I recall from that is it said, if you didn't use PPP for all of your wages, there's wages left over, you may be able to get that credit. So before, whereas I would have said, hey, just use your payroll costs because that's going to give you 100% forgiveness. And that's how they calculate the loan and you're good to go. Now it matters, right? Maybe we should really think about what we're doing in this for all of the other costs. So what are some of the costs, other costs that qualify, and what do I need to pay attention to?
Yeah, Todd, good point. As you know, we talked about on another webinar, the Consolidated Appropriations Act changed the law and said, hey, if you got a first draw PPP, you're now also eligible for the employee retention credit, which is great news. What they did is, as part of that, they also said, oh, by the way, though, you can't use the same wages for both programs. So that has made, you know, these other covered PPP costs more important from that standpoint, trying to come up with, and again, they've also, the other thing is if you look, they expanded the other costs. I mean, if you look and compare this back to an old loan forgiveness application, you're not going to see anything such as covered supplier costs or covered property damage or covered operations expenditures or covered worker production expenditures. Those are all new categories that apply for round one and second draw. Now to your point, you know, Todd, we are talking, you know, to the extent that, you know, borrowers have not filed their first round loan forgiveness application, we're saying, hey, maybe you want to be more intentional and maybe just instead of just putting payroll on there, you want to put more categories on there. We're also, the AICPA and a lot of groups are pushing the IRS Treasury really hard for guidance around the wage allocation process. Because the other thing is, let's say someone filed their loan forgiveness application in early December and they just took all payroll and they didn't bother with that. It's like, well, why should they be harmed now because of something they didn't even know about? So we're pushing the IRS really hard to give you know, taxpayers the most flexibility they can in the allocation of wages, and that you shouldn't be locked in on something you filed when you didn't even know what the rules were. But at this time, we have none of that guidance. It's driving people nuts. It's driving payroll companies nuts because, you know, they're being asked by their clients, well, can you determine if I'm eligible for the employee retention credit on a look back basis? And if I am, how do I get my money back? And it's like, there's no answers. And oh, by the way, your fourth quarter payroll is due, reporting is due in like 5 days. And we have no guidance on any of this. But it is really, you know, it's really important. Now what they're doing here, this is on the loan application, this is not on the forgiveness side. What they're really just telling you here is like, okay, you have to spend your loan on qualified costs, which is your payroll costs plus all of these categories. You can't spend it on capital equipment. You can't spend it on real estate and things, generally real estate. You have to make sure that you spend it on these categories. And then they still have the provision that to get loan forgiveness, you still have to spend at least 60% on the payroll cost side.
Nick, anything to add?
Yeah, the only other thing, just different from round one, you did have to say with sort of numbers how much you planned on spending in each category. Now they're just asking you to indicate where you plan on spending money. So I think folks can generally check payroll costs, check rent and mortgage, utilities, and if you think you're going to use it for some other things, that's fine too. And then if you just think through the entire process, if your loan is under 150,000, which we haven't, there's a whole separate conversation that could be had on the revised PPP forgiveness form. You just have to certify that you spent the money in specific areas that made you eligible. So, and you don't have to submit documentation supporting that information if your loan's under 150,000 for forgiveness. So I think people will have some flexibility in determining how they're allocating. This just gives a little bit more leeway for folks. If you spent 60% on payroll and then 20% went to rent and mortgage interest, you didn't have anything for utilities, you can still have some other costs that you could have incurred, and you can allocate dollars to that. So I think if anything, it just makes it a bit more confusing because there's a lot more categories that you can have. But in the end, it does make it easier for you to be eligible for receiving full forgiveness because it gives you more categories that you could spend dollars on. So big caveat on the whole process is, try not to get too wound up on every potential scenario of every box on the form. I would encourage people to try to think through the whole process and what are they trying to get to in the end, and they just want to know where you're spending the money. And then in the end, they want to know how you spent the money. And just keep in mind, and just keep good records with it, and you should do fine.
Yeah, good point, Nick. I don't think there's any foul if you don't check a box that you don't spend money on or whatever here. It's just kind of like general guidance.
That's good. I just want to make sure we all knew about the employer retention tax credit. And there's a question in the chat room. Are you going to do another event? I think we have to. I just got to find some speakers. If you guys will come back or find somebody else. I got to work through that process on my own too for our own company so that I can figure it out. I think that'll help us sort of get to the bottom of it. Okay. I'm going to clear this. All right. This is the meat and potatoes, I think, of a lot of people's questions. Oh, you know what? Let's go back 1 second, because when we talk about these expenses, are we talking, Greg, this is up your alley. Are we talking accrual basis or cash basis? Has there been any guidance on if I owed rent, but I haven't paid it yet? Does that count as rent? If I owe wages, but haven't paid them, does that count? How is it going to work?
Yeah. So the second draw will work off of the same guidance we had in the first draw. So probably the biggest thing is in the payroll area, you're allowed to use your payroll costs that are paid or incurred during your covered period. So you get to look at both of those. Now, again, if someone, not to get too far in the weeds, someone may have remembered in the first round, they had something called the alternative payroll covered period, where you could start a little bit before or after. Well, now they've totally eliminated that because they're saying, well, you get to pick any covered period you want between the 8 weeks and the 24 weeks. But again, for the most part, again, you're going to have the eligibility of incurred or paid for these expenses. There's still some rules, they're not going to allow, they have some rules around not being able to accelerate rent payments or not being able to accelerate retirement payments. You have to kind of look at your standard business practice. But again, when you look at it, you're going to be borrowing 2.5 times to 3.5 times your average monthly payroll. You get up to 24 weeks to spend it, and you have all these new categories. Again, other than, the point that Nick was bringing up before with seasonal businesses where you got to be careful. I mean, if someone's in operation during the whole covered period, hopefully you're not going to have anybody in a position where they're, scrambling or trying to figure out that they have enough covered costs to get loan forgiveness.
All right, let's dive into calculating my quarterly reduction. And the first question we had in the chat room was, what if I wasn't in business in 2019?
Yeah, so if you weren't in business, because again, why they're asking that is the general test is that to be eligible for a second draw, you have to show that you have at least a 25% reduction in gross receipts in any quarter in 2020 as compared to the comparable quarter in 2019. So yeah, it brings up the question of, well, to be eligible, I have to be in business on February 15th of 2020, and I can't be closed now. But what happens if I started business in 2020? So there's guidance out there on what you can do. So that the general, let's just say you were in business, you have to be in business on February 15th. So you're in business in the first quarter, and then of course you're in full business for second, third, or fourth quarter of 2020. In that case, you'd be allowed to compare your second, third, or fourth quarter of 2020 gross receipts to your first quarter of 2020, kind of on an annualized basis. They're like, we'll try to make it a full first quarter and look to see if you have a 25% reduction in that case. And then if you're only in business for the third or fourth, it's, they kind of ratchet it back. But in general, in that situation, if you weren't in business for 2019, you do your comparison within 2020.
And again, my question on if you're a small business and you're just using QuickBooks and it's like, I record expenses when I get around to entering them in, and I record revenue when I get around to sending out invoices. Is there a rule on cash basis, accrual basis? Do I need to hire an accountant here? Probably the answer is yes.
Well, you might need some help. They provided a definition of gross receipts. And like most things SBA, it's fairly complicated and fairly detailed. And if you think about it, they say, well, what they put in there is you have to use your overall method of accounting, but then they don't necessarily say whether that's your tax method or your book method. Now, again, if it's the same, if it's like, but I would probably say look to your tax method of accounting. And then they start saying certain things are in, certain things are out. Probably the most important things that are out is your PPP1 loan proceeds are out. You do not have to include those in gross receipts. Most everything else, Todd, gets thrown into gross receipts with maybe some exceptions on sale of assets in certain cases are excluded. The one thing that we don't have, and if you have an EIDL, an economic disaster loan, that's out. But a lot of taxpayers got other loans from like Health and Human Services or preferred providers. And right now there's no guidance on whether or not those proceeds can be excluded from the calculation or not. So we have a lot of dentists and healthcare providers that are running these calcs. And right now they're like, well, we're finding that looks like we're disqualified from a second draw loan. But again, it's kind of, as Nick said, there's, the recommendation is if you go out to the SBA website and you look in the borrower section, there's a separate document that says basically how to determine your gross receipts deduction for second draw. Or, again, hopefully your accounting firm has been through that and again, can help you with the calculation. We're doing that with our second draw applications. It's like, what are we putting in? And I'm sure, and we can get to it. I'll let Nick comment. I'm sure then the question comes in, well, how the heck do I document that? And we can talk about what the documentation is and what your options are there, but I'll let Nick comment on anything.
Yeah, I mean, to try to take a more simplistic approach to things. I think a lot of the spirit of this in general is that you need to just be making a good faith certification that these are, accurate. It's accurate information to the best of your knowledge. I think the whole point of this program, has been to get dollars out to businesses that need them. I think if you're using your standard accounting methods in terms of how you track your revenue, compare it from one quarter in 2019 to a comparable quarter in 2020. I don't think the government's out here to, make this super complicated so they can, catch a bunch of honest business owners making simple mistakes with pretty complicated tax stuff. So I'd encourage people just to, look at your account. If you don't have QuickBooks and you just do things yourself in Excel over the course of time, just run a ledger out of your business account and from your bank. Just add up, business deposits that you had. It's a simple way to document it. Compare, and it's calendar quarter. So something to be mindful of if you have an odd fiscal year because you're a seasonal business for whatever reason, it is calendar quarters that they're referring to here. Look at those calendar quarters and just try to make a simple comparison to the other ones. One thing I'd add, there is that box on the left there that says, applicants for loans under 150,000 can leave that blank. They can, as it relates to the information needing to be submitted to the SBA in terms of what the SBA specifically is requesting. However, the SBA has left it up to specific financial institutions that say that they may request additional information in processing applications. Our bank, as a matter of practice, is gathering revenue reduction information on every loan that we are processing on the front end, regardless of size, because of the fact that you have to show that information for forgiveness. We want clients to be doing this calculation on the front end, providing that information to us on the front end so we can say, yes, this client has done this analysis to determine that they are eligible, because the last thing that we or the borrower would want would be to get into a bunch of scenarios where they ended up thinking that they were eligible. They didn't bother doing the calculation. They looked, 4 months from now and they submit for forgiveness and it was determined that they were not eligible. So we are collecting the revenue reduction information on every loan. I would suspect a lot of banks are doing something similar. Greg, you talked to others. I assume that's probably a common practice.
Yeah, I think that's a good practice because it's not like that's an exception and you don't have to meet the gross receipts reduction. They're just saying, oh, you don't have to document it at this time, but as Nick said, you're going to have to document it probably eventually. So why not do it up front?
Yeah, and you should be doing the calculation to determine you're eligible. So all I'm asking for, it's like the teacher saying, show your work on the assignment. It's just show me that you did it, and we'll go from there.
And then,
No, there's just one quick question. I think it's pretty straightforward. It says if we as self-employed, if I had 3 transactions in the second quarter of 2019 and none in the second quarter of 2020, am I eligible?
I'm assuming we're talking realtor commissions, it looks like.
Yeah,
So
yeah.
I would suspect if you had 0 for income in second quarter of 2020, it should be pretty easy to qualify for a 25% reduction. Even if you had $1 worth of revenue in the first quarter of 2019 or second, you'd qualify as a percentage. So for those that had 0 income in a quarter, it's pretty easy to document you had a 25% reduction.
there you go, Marty. You win. You win the lottery. Okay. Well, let's. Was somebody saying something?
Oh, Todd, I just going to add the one thing that they don't mention in that box that comes up sometimes is that if you have related businesses, there are rules on aggregation for affiliation, and you have to test your gross receipts on a aggregated basis. So if you had 2 or 3 companies that meet these affiliation rules, which are complex, then when you do these gross receipts calculations, you have to do it on a combined basis. And that's causing a little bit of problems from some borrowers because, of course, on round 1, you had to disclose who your affiliates were. But other than on determined employees, you didn't have to do any other calculations. So again, if you have that, you want to spend some more time on that because it's a more complex calculation.
One other thing I'd add on the revenue reduction, certainly for loans over 150,000, and we are doing this, like I said, for every loan. We're collecting the financial information to document the 25% reduction. The SBA is requiring that those financial statements are, the first page of those statements are signed by the borrower, and then the previous, if you had 4 pages of a financial statement, the other 3 pages are initialed. So we are collecting signatures on all of that, and it's the SBA's way of attesting or having the borrower attest that they are accurate financials that they are submitting. It may seem like overkill. It is not. That is not a deviation from sort of standard operating procedures for the SBA. So when you're previously, if you're working through a large SBA loan, you would have to do the same thing on your financials that you're submitting. So they're just applying this uniformly to PPP. Again, it would have been helpful to have that information before we were processing hundreds of these, because of course they released that like a week later. But we're building in to collect those signatures as we collect signatures on loan documents. We are just resubmitting those same documents back to folks in DocuSign and having them sign them that they're accurate. But just another thing to note, you can speed up the process. If you're submitting financials to your borrower, you might as well just throw a signature on them. It'll speed things up for your lender too.
And I think that's going to be the most common way for borrowers to support their gross receipts reduction is, their internal quarterly financials, as Nick said. If for some reason, some people are like, I'm in QuickBooks, but I do I do most of my accounting on year end or something like that. You do have the option also to use bank statements. So you can support, a reduction through bank statements, but you have to be very intentional on showing, on the deposit side, what are gross receipts. So hopefully in most cases, I think the best way and the most efficient, effective way will be to do as Nick said, the signed and initial quarterly financials.
There's a really good question in the chat room that just came up. Sorry to steal your thunder, Jim, if you were going to read it out loud, but this is on revenue for real estate agents. Revenues are not to include funds collected for others. So if you're a property management company, your revenue is not the rent that you've collected that you've then turned over to the owner. But does it apply if you're the broker? You collect the full fee and then you share the fee with your agent. Well, how do you count revenue in that case?
So if you go to again, you have to look at the SBA rules on receipts. There are certain situations where they talk about what I'll say where you're collecting receipts on behalf of others, that you're allowed to exclude those. So you may go in there and find that in certain situations, you can take those revenues out of your borrowing base. And again, you want to make sure the key thing is then being consistent between your 2020 quarters and your 2019. So you're doing apples and apples. There's other situations where in the subcontractor world, where the guidance says, well, no, if you're subcontracting it out and you're collecting there and you're doing a pass-through billing, no, you can't exclude that. You have to leave it in. Now, again, if it's in on both spots, as long as the activity isn't too wildly different, hopefully it doesn't hurt you. But yeah, you just again, you need to work with your accounting firm or go to that document on the SBA website that talks about, how to determine your reduction in gross receipts, and just take your fact pattern against that. And, hopefully you'll be able to, again, if you have questions, that's where it's like, all right, I got to ask my accountant or my, not to put Nick on the spot, 'cause it's, I don't want to say the lenders are like, they're probably understand, but they're saying it's not, our responsibility to determine whether or not you meet the gross receipts. So probably be better to go to your accounting firm than putting your lender on the spot to say, hey, can you tell me, if I qualify, what should I do with this? That's probably not a fair question for them.
Yeah, we direct people back to their accountants too, Greg. So the buck always stops with you guys. But yeah, I mean, we try to answer questions as we can to give people guidance, with the asterisks to it that, we are certainly not providing tax or legal advice. I agree with Greg. I mean, try to be consistent in how you're applying the methodology. For the example of the broker, I would suspect that they have a sort of fixed percentage that passes along to the realtors anyway. So, whether you're using the gross number that you collect and then pass them to your sub realtor, or the net number in terms of what you keep, I would suspect that the revenue reduction would be the same percentage regardless, because the reduction would determine it. But
Yeah, Todd, not to get into the weeds, I mean, the language they use in the documents, or I just say that gross receipts do not include amounts collected for another by a travel agent, real estate agent, advertising agent, conference management service provider, freight forwarder, or customs broker. Now, we don't know if that's all inclusive or exclusive, but that's the language they have in the interim, the IFR, as we call them.
Yeah,
Hey,
I'd be interested.
Sorry.
Go ahead, Jim.
There's another question out here that may apply to multiple people. Do we need to aggregate any NAICS 72 subsidiaries if you're the parent?
You have I'm trying to think you have the separate rules on the physical location side. So again, that's, on the physical location side, NAICS 72, on a location by location, you have the 300 from that standpoint. So you're good there. So I don't know if that's what their question is, Jim.
Yeah, no, I'm not sure. The question is, it's clear that NAICS 72 and it can apply to standalone, but as a parent company, do we need to aggregate the NAICS 72 subsidiaries?
This is a good time to remind people you need to talk to your professionals. This is a good time to pay the professionals hourly rate. If you're a small business or a small company, it's money well spent. Because I was going through this form. Sorry, let's see, move mouse. Up here, you have to initial all of these boxes that say you've done all of this stuff correctly. I would hate to see a situation where somebody unknowingly got tripped up because they didn't consult a tax professional like Wipfli or work with a reputable bank. So yeah, make sure you're working with good people here. And there's a question here also, Jim, that, my bank hasn't given me the forgiveness application. Can I go to another bank to get that application, submit it to the new bank? So people that are using this to shop banks, Nick, what's sort of your advice on that?
For forgiveness specifically, they'll have to go to the bank that processed the loan, because when the bank submits for forgiveness on your behalf, they're the one that has the loan. And then once you submit for forgiveness, if it's approved, the SBA remits a payment to the bank that gave you the loan. So once you get a loan, a PPP loan from a bank, the forgiveness needs to be completed with that bank. Now, if you did your first PPP loan with one bank and you'd like to switch and do your PPP loan with your second PPP loan with another bank, you can certainly do that. You will have to resubmit information that you submitted for the first round, certainly in relation to like 2019 payroll information, for example. If you're a new client of that new bank, you'll have to submit organizational documents and identification documents. So there's more paperwork and process involved with that. But you can certainly submit your second PPP loan with a different bank if you're so inclined, but your forgiveness will need to be submitted through the bank that provided your first loan.
And Todd, maybe I know everybody wants to be done with PPP1. We wanted to be done a long time ago. One of the requirements to have a second draw is that you had to have a first draw, but and the other requirement is you have to have spent all of your PPP1 funds, including any increase by the time you get your PPP2 disbursement. But there's no requirement that you have filed your loan forgiveness application prior to doing a second draw application. That's not a requirement. And it seems like every time we get to a new week, and again, I know people want to be done with this, but it seems like there's, more reasons every week to maybe delay your loan forgiveness application on draw one. We talked about the employee retention credit on, maybe you want to delay. And Nick, I'll maybe ask you for a comment, because I don't think it happens every time, but we've been hearing that in a number of situations where a taxpayer has a loan forgiveness application in the process and they filed a second draw application, that the SBA is sending a note back to the lender saying, hey, there is a loan forgiveness application in process, and for some reason or another, we're looking at that. Doesn't mean there's anything wrong with it and that they won't provide forgiveness, but because of that, they're then stopping the processing of the second draw application.
Yeah, and that's a good sort of segue into some of these errors that we are receiving on these second draw applications. And Greg is right. For seemingly no rhyme or reason, at times we're submitting, or we have submitted, second draw PPP applications for borrowers. Sometimes those borrowers have a forgiveness application that's already been submitted and it just has not been approved for whatever reason. And they built rules and into this software application that we submit, but they haven't told us what all these rules are, so we don't really know how to apply with it directly. But we're getting a notification back when we submit that second draw PPP application that that there's been an error, and it'll give us an error code, E0114 or something. And they'll say we need to submit an email through the forgiveness portal to solve that issue. So, of course, we submit the email through the forgiveness portal, but we haven't received any guidance back as to what we need to do, or what the borrower needs to do, or what information needs to be provided to solve that issue. So some of the errors we get back, and it's very simple, like something related to the taxpayer identification number seems incorrect, and we realize, oh, we finger fumbled and transposed numbers, right? Or that issue with they didn't put in the date of establishment on a sole proprietor. So we can go back to the borrower when we know what the issue is, gather that information quickly, solve it, and resubmit, and then it gets through. But there's a handful of them where we get an error that they have not, that there's an error with their round one application. Sometimes that borrower hasn't even submitted for forgiveness yet. They may have submitted their first round, got their first round PPP loan, haven't submitted for forgiveness yet, but for whatever reason, that file has been flagged or is being reviewed on the back end, which was unknown to the bank or the borrower. We submit for the second draw application, and then they say that there's an error and we need to solve it. So I know it's frustrating for borrowers that are applying and getting these error messages back from their lender. Believe me, it's frustrating for us too. We don't have information. We have exhausted a lot of efforts in anything we can think of to try to gather that information. The SBA is doing a webinar here this afternoon, which we will be logging into, which is solely on these error codes. So hopefully we have some more information then. We've called a regional office to try to get information. So we're working as hard and as quickly as we can to try to get information from them so that we can pass that along to our clients and rectify those error issues. And we appreciate everybody's patience as we work through it. What I'd say, like we mentioned early on, these funds seem to be stretching out a lot more than what the first go around of funds did in March and April of last year. So I'm not anticipating that these funds are just going to up and vanish and then everybody missed their chance because there was some random error on their application. So encourage patience as we work through it.
Todd, we get, just thinking through this, a lot of times we get the question, and I'm saying, hey, don't rush out to do your loan forgiveness application. There's a lot of uncertainties, and we get the question a lot as far as, well, gee, when do I have to file my loan forgiveness application for the first draw? And believe it or not, the latest you can actually file your loan forgiveness application is the maturity date of your loan. And that can be 2 years or up to 5 years. Now on draw 2, it's actually 5 years. The real answer, and again, that's like, wow, that's forever. The real answer is, as long as you do it within 10 months of the end of your covered period, you're okay. And the reason that's important is after 10, if you do it within 10 months of the end of your covered period, the lender can't force you to start making principal and interest payments until you get your forgiveness determination from the SBA. So as long as you're filing your loan forgiveness application within 10 months of the end of your covered period for round one, you're going to be fine.
What I'd add to that is, they did release an updated forgiveness form for those under 150,000. Those forms it's a one-page form. You're essentially certifying why, or that you spent the money accurately or appropriately, and you don't even need to submit any information to your lender to support that. So the forgiveness process for loans under 150,000 from sort of last week going forward is very simplistic. I think the auditing side of those is going to, the numbers that get audited are very, very, very low. And most people should just get sort of blanket approved forgiveness, assuming that they certified correctly that they spent the money. So it should be a pretty easy process for folks to work through forgiveness. So if you haven't, and we are, with those new forms were just released last week, we are revamping our forgiveness workflow to accommodate those new forms, and we will then have those available for our clients. But I agree, it should be something that people shouldn't have any trouble in submitting information, because you don't need to provide any information, but submitting for forgiveness here well within that 10-month time frame before you have to start making payments.
Thanks.
Did we lose Todd?
I was just wondering that. I see Jim and you and I. So I don't know if I don't know if we lost our moderator Todd. Oh.
I think you left. I think we're done.
Oh.
Our hour's up.
Okay.
Well,
Nick and Jim and Todd and everybody, thank you very much.
yeah, thank you.
Thank
And
you.
appreciate being on the call, and hope the information was helpful.
All right. Talk to you guys soon. Bye.
Yep.
Bye.
So